as a merchant, you may have heard the term interchange before. And a lot of people ask me, what is interchange? How does this work? Why do I pay so much in interchange? So on and so forth. And I think it's important to address that question because in order to understand interchange, you really have to understand how credit card processing works or how a transaction actually gets processed. And so let's start with just the basics of credit card processing 101. Say you're the merchant, and so we're going to go ahead and draw the merchant. And we're going to pretend that you have a brick and mortar store. A lot of times you may have a store online or something like that. You know, you can tell my drawing is really good. And you've got a little credit card machine here with your little screen, and you know, it prints the receipt out and your little buttons and whatnot on it, and got your little credit card swipe right there on the side. And so what happens is at your store, your place of business, you process the transaction. Now again, whether you're submitting this online because you manually keyed it or you're swiping the card, whatever, from the terminal itself, whether virtual or physical, it sends a signal off to get an authorization. That first signal gets sent to the processor. Now in our case, we're from Precision Payments, so we'll put Precision Payments. All right, and so Precision Payments will take that, and just as a side note, we do what's called lowest cost routing. Now lowest cost routing is a pretty cool tool because what it means is that whatever card brands are on a card, now you may look at your debit card and you'll see there's a Visa logo and there's all kinds of different logos on it, and barring anything else interfering with processing that transaction, it will process to whatever the lowest cost direction is. So if it's cheaper to go with this network, it's going to go on that network. If it's cheaper to go with this other one, it'll go with that one. But the logarithm is created in such a manner to save you as the merchant money. Very, very cool technology. Now, when we process the transaction, we'll know immediately which card brand it's from. And so we'll just use the four major card brands, Visa, MasterCard, Discover, and Amex. All right, and so you as the merchant are processing a card, and you swipe the card, and let's just say, for example, that in this particular case, it's a Visa card, right? And so we'll say it's a Visa debit, and that Visa debit was issued by a bank, right? Obviously, all debit cards are issued by a bank. All cards are actually issued by some form of bank, whether it be credit card, debit card, you name it. And so this one we'll say is from Bank of America, all right? And we'll use Bank of America as our example here. But it could have been, issued by Wells Fargo. It could have been issued by SunTrust. Any number of the big banks. I mean, and really any bank can issue a debit card. But let's say in this case that it's from Bank of America. So swipe the card, it goes to Precision Payments. Precision Payments receives it and says, okay, this is a Visa card. We need to go to the Visa, and then Visa sends the signal off to Bank of America to get an authorization. Now, Bank of America is going to tell us, does this card have the funds to support this transaction? And so we'll say that it's a yes, and it comes down, and it gives you on your screen, and it says a little authorization, right? And you get this receipt prints out, and now you have the promise of funds from that transaction. Now, if it were to receive a decline, the same process happened. It went up to the bank, and the bank just said, no go. You don't want to authorize this transaction because we're not going to pay you for it. And so the interchange comes in that everyone along the way involved in this transaction has some form of revenue stream involved in the transaction. Now, believe it or not, the merchant most times gets to keep most of the money because we're funding the actual dollar amount of the transaction to the merchant. Now, when you hear the term interchange, the interchange is coming from the issuer. Now, we're going to call these guys, the banks, we're going to call them issuers. And then we're going to call the processor, the acquirer. One issues cards and issues transactions. The other one acquires them, as you can see. So in this case, the issuer has made a deal with the card brand to issue cards. And so Bank of America got together with Visa and said, we want to issue debit cards to all of our cardholders. And Visa said, okay, we can handle that. We'll go ahead and let you use our network, and then you can support those cardholders through our cardholder agreements and the infrastructure that we've already created. And not only that, you can actually create revenue by issuing these cards and your cardholders using them. And what we're going to do is we're going to negotiate a price, which every different type of card that you issue, Bank of America has credit cards, debit cards, business cards, rewards, business cards, rewards, regular cards. I mean, every different bank that you could think of, whether it be airline miles, every type of rewards. All of those are different types of cards, and all of those have a different relationship with whichever card brand that they're issued on, i.e. a different interchange rate, which is why it's called an interchange schedule, because it's 20 pages on Visa, 20 pages on MasterCard, so on and so forth. Each card brand has negotiated rates and created categories of cards that the issuers can fall under, and those rates are called interchange. And so this interchange amount is the variable amount that you really as a merchant, other than just looking at the card and seeing, oh, this one's a rewards card, or oh, this one's a debit card. Other than looking at the card physically, you still won't even be able to tell exactly what type of card it is and what the interchange rate is going to be, and you could drive yourself nuts by doing that. But this is where interchange comes in, and it's a pre-negotiated fee between them. Now, you may ask, well, where does Visa and MasterCard make their money? Well, what they do is they actually get paid by Bank of America for being allowed to issue the cards, and per transaction, they get a portion of it, but it's not part of that interchange schedule. This entire interchange goes to the bank, and then the bank pays Visa based on whatever their negotiated rate is. Same thing here. The acquirer has to pay Visa for processing the transactions. And so Visa and MasterCard and the rest of the card brands are actually getting paid on both sides of the transaction. Now, it's a very, very tiny, tiny amount, but they make it up with the large volume of transactions that they make. And the actual, compared to the actual fees that are charged by the issuers, it's much, much lower. Now, the processing fees are the ones that the processor, like in this case Precision Payments, charge to handle the front end of all of these transactions, to issue, to acquire the transaction, to process it all and whatnot. And in an Interchange Plus model, what they do is they just say, okay, any interchange that Bank of America, Wells Fargo, whoever the bank is going to charge, plus the dues and assessments, kilobyte fees, any other fees that the card brands are going to charge, we're going to just pass it through, and then our fee will be flat on top of that, whether it be per item and or a percentage. Now, you asked, you heard dues and assessments, kilobyte fees, some other things in there. Very quickly, Visa, MasterCard, Discover, American Express have decided to charge other fees. And so you may look at your statement and you see this long list of fees. And some say interchange, dues and assessments, NABU, all of these other things. And what happens is you may not really be able to decipher which of these fees are direct from the card brands that I am not able to avoid, and which of these fees are coming from my processor and are still necessary and unavoidable, and or maybe these ones are ones that I could be saving money if I was with a different processor. And so what I want to tell you is this. We'd be happy to take a look at anything that you have, any questions that you might have. Our website will be in the description. You can click on our website, go to the Contact Us section on our website, and we would be happy, like I said, to answer any questions that you might have. There's even a place for you to send us a statement, and we'll just do a breakdown. Hey, look, this is the categories of this is what you're being charged, this is how much you're actually paying. But there's one thing that you as a merchant need to look after. All of this makes a statement complicated, and it's complicated by design, but for you as a merchant, there's really one number that you need to worry about, and that's the all-in percentage, which is the total amount you paid versus the total amount that you processed. And so I hope you enjoyed this video. I hope that explains a little bit about what interchange is, how credit card processing works, and how it pertains to you. If you have any other questions, like I said, please contact us. Again, my name is Ryan Cabrera, and we're with Precision Payments. Thanks so much.